India and Fintech Convergence Council and National Payment Council of India. The fest is presented by the Ministry of Electronics and Information Technology, Government of India, Reserve Bank of India, and supported by Niti Aayog, Startup India, and Invest India. We would like to thank our partner, investment partner, Venture Catalyst, agenda partner, PayPoint India, silver partner, Dubai International Financial Center, Jakarta, and CRIF, bronze partner, Swiss Business Hub India, Vienna Network, and Ugrow Capital. Our next session is a workshop on the opportunities in digital finance for climate resilience post-pandemic. Without further ado, let me introduce our esteemed panelist we have with us today. Ms. Mallika Anand, Head Insights and Learning Catalyst Fund, Mr. Timothy Rann, Managing Partner, Mercy Corps Ventures, Ms. Ajaita Shah, Founder, Frontier Markets, and Ms. Aditi Gupta, Principal Investments, Asha Impact, who will be joining us very soon. I would request all the delegates to put their questions on the Q&A window, and we will try to respond them at the end of the session. Over to you, Ms. Anand.
Hi, all. Thank you very much for the introduction, Ritika. And thank you to everyone who's joining us. I know everybody's been enjoying a fun-filled, packed agenda here at the conference, so I'm really pleased that our session made it onto your agenda. I think that I want to spend the bulk of our time letting you hear from our panelists, but that we would benefit maybe from a little shared vocabulary and a little background to set up that conversation to be the most productive. So my proposal is that I spend maybe like the first 5 or 10 minutes giving us a kind of conceptual foundation for the conversation, and then we turn it over to question and answers. And I have a bunch of questions that I want to pose to the panel, but as Ritika mentioned, we'd love to see questions from you guys in the conversations box, which I am seeing to the right of my screen. So to get that going, what I'm going to do is actually share a few slides. Before I do that, let me just give you a little bit of background about where this panel is coming from and how we pull together this group of people. So I think everybody is aware, the pressure and the urgency to do something about climate change mounts every day. And there's a lot of excitement and enthusiasm and to do something about climate change, but also some feelings of maybe despair or hopelessness about where meaningful action can really take place. And I think there are really good answers about what can be done. And we're hoping that, at the end of today's session, you will also feel that sense of optimism about what next steps are possible and what meaningful things you and your organization can do to address climate change. But I think we, as the digital finance and fintech financial inclusion community, are in a unique position for really talking about one aspect of climate change, which is climate resilience. So, to back up a step and think about this from a high level, a lot of the global conversation about climate change is what we call mitigation, right? So thinking about carbon emissions, thinking about why we're experiencing climate change, who's responsible for it, what we should do going forward in terms of cars and electric vehicles and pollution to limit future impact on Earth. But there's a second part of climate change that's happening as we speak, which is that, as you read the news, that there are floods and fires and pests and droughts that are happening as a result of climate change already today. And the people who are bearing the brunt of that change, the people who actually have to deal with the impacts on their livelihoods and their homes and their futures today, are the people that we work with, right? Are the vulnerable populations that our organizations and our businesses serve. So I think we're in a really privileged position to be able to already step in to support those vulnerable people and to get them the solutions they need. So with that, let me share a few slides. Let's see if this will let me do this. Oh. Can folks see my slides? There we go. So I work at an organization called BFA Global. We're home to a inclusive startup called Catalyst Fund, and we've recently partnered with CGAP, PayPal, the World Resources Institute, and Race to Resilience, which is a UN organization, to think about the relationship and the nexus between digital finance and climate resilience. And that work has resulted in the couple of slides I want to share with you today. So the first is, I think, where I was starting this conversation, that already the negative impacts of climate change are being felt, and they're being felt by a very specific group of people, namely the people who we know to be already the most vulnerable, right? Those who depend on natural resources for their livelihoods, farmers, fishers, pastoralists, etc. Those who are already poor and vulnerable, right? Who, for whom a shock or an event could really push them over the edge. And then we know, of course, that the impacts of climate change are concentrated in specific geographies, right? So that, for example, the increases in temperature are expected to be higher in Africa than in other parts of the globe. The good news, sorry, one more piece of bad news before we move to the good news, is that although climate change impacts are concentrated among vulnerable people, today's climate action is concentrated in mitigation. So what you're looking at here, sort of funding flows into climate action. And what you see, in this bottom fat gray column is that the vast majority of funding is going into mitigation, right? So this is all the money for renewables, all the money to get people off fossil fuels, all super important, but also leaving behind what we call the adaptation solutions, right? So the solutions that are going to help people actually deal with the impact of climate change. So you see some numbers here, and they paint a pretty sobering picture. What this means is that though there are
Okay, I think there's a technical issue from Ms. Anand's side. So, Nisha, would you like to take ahead the conversation?
I think that Mallika is kind of setting the stage, so we'll just wait for her to rejoin. Yeah? I think she should be back shortly. Otherwise, yeah, I think there she is. We're good.
Sorry, I can hear you guys, but somehow you can't hear me. Okay, so I'm just gonna speed through in case we have more problems. So what I was saying is that even though there are reasonably good solutions and reasonably good products and services that can help people deal with the impacts of climate change, they're rarely suited to vulnerable people, right? So price points are too high, distribution channels aren't there, they're dependent on infrastructure or logistics that are not actually present in the regions that we're talking about. So, for example, we know that a heat wave in India and a heat wave in Paris, both of which happened in recent months, have vastly different impacts because people in Paris have access to ventilation and cooling systems, and have support to get for public services. Whereas folks in rural areas in India, when those heat waves hit, not only don't have access to cooling solutions, but also might face breakdowns in supply chains around water, for example. So you have this situation in which solutions exist, but the people who need them don't have access to them. I think the good news is that we in the fintech and financial inclusion world know how to reach these people, right? We have decades of experience building innovative supply chains, innovative digital models and distribution channels to get them services and goods that were previously unimaginable. Right? So we can think about things like digital ID, digital supply chains, any kind of digital financial service, payment rails that provide us the infrastructure and the architecture to potentially get services and goods to these people who need them. I want to highlight, I think, 3 buckets of solutions. I think when we look at the vast range of impacts of climate change, it can be anything. It can be mosquito-borne diseases, the health impacts that result, but also the lack of investment in education because people are spending too much on healthcare. Right. So on one hand, the impacts of climate change are so vast that it's hard to really have a firm view on what the solutions are. But I think if we start at the actual physical impacts of climate change and think about what people are experiencing right now, it gives us some directionality. The first bucket of solutions I want to highlight is around disaster management. So we know about these populations that a single disaster, a single shock can really have devastating impacts for the household. But we also know that digital finance solutions like insurance, like emergency payments, like remittances can be a lifesaver, can be a lifeline in those times of need. So I think there's a whole bunch of solutions around disasters. The second bunch of solutions I think that we should be thinking about as a community is sort of adaptations to livelihoods and to households. So we know, for example, that farmers can really benefit from drought-resistant seed, from drip irrigation and micro-irrigation solutions, from land leveling and water management solutions. Previously, many of those were considered out of reach or too expensive, but we're already seeing fintech and digital finance innovators creating bundled models, credit models, pay-as-you-go models to get those inputs and systems to people who need them. I think a second group in there are the kinds of investments that people need for their homes and their dwellings. So we talked about ventilation, about cooling, to a certain extent refrigeration. As temperatures are rising and people face threats to food security, refrigeration and cold chains are going to be a huge solution that people need access to. And the last group of solutions I would really highlight is about markets and ecosystems and communities, which is to say, there's this really interesting confluence of helping people whose livelihoods are threatened by climate change in getting them access to things like drought-resistant seed or organic seed, not only reinforces their livelihood, but also gets them access to a higher price market. So if you're investing in sustainable agriculture, you might actually be able to sell your produce at a higher price point. But to make that possible, we need markets and marketplaces to work. And already we're seeing digital finance, online marketplaces, bidding models stepping in to enable those kinds of solutions to function. I wanted to just take these few minutes to say, we really have ways forward. There's good information, there's good models, there's good innovations out there for those of us in this community, in the financial inclusion and fintech digital finance community, to start thinking about how to make an impact on climate change. And I'm really privileged to be able to welcome Tim and Ajaita and Aditi, who I think are all leaders in thinking about how to really deliver on this nexus. So with that, I'm going to start posing some questions and we can move into the discussion section. And again, I look forward to seeing sort of any commentary in the chat here. So the first question I think I want to pose is to give our panelists a chance to talk about how they entered the climate space. I think all of us come from other worlds, but are feeling the urgency around climate and found, the journey into climate individual ways. So my question is, or the first thing I'll invite them to do is to introduce themselves, a little bit of background, and to maybe give us a little bit of a few thoughts about how their climate journey, about how they entered the climate space. And Ajaita, I'll start with you.
Thanks so much, Mallika. I was just kind of pondering all the different buckets that you're talking about, and I was saying, yes. So first of all, thank you everyone for inviting me to be on this panel. And I do think this is a very critical topic to talk about. And I think everything right now is all about convergence. My background on, looking at climate and looking at our journey into this really comes from a history of microfinance, and then comes in linking into frontier markets, like what I've started as a company about 10 years ago, which essentially was focused on the nexus of connecting rural families, rural households that are literally living in the last mile village, getting them access to solutions through a localized supply chain, but then also leveraging digital platforms that also then really want to deliver a bottoms-up solution. We kind of created a company that was focused on a platform creation. I think the point that you made, Mallika, is really critical in saying that the challenge of climate is not just about the consumers, it's also about the population, right? And if we look at this on a rural India perspective, we're talking about 800 million people that are essentially in these rural areas that today are fundamentally consuming poor fossil fuels or solutions that on a fundamental level is unfortunately contributing to this climate change reality, not by choice, but by lack of access, right? And so what we end up seeing is when 800 million people are using kerosene or using fossil fuels that are not in favor to climate, they fundamentally are not just shifting the climate rhetoric, but they're also unfortunately not seeing a better lifestyle. And so for frontier markets, when we started our journey, we said, let's address that. Let's actually connect rural customers to better solutions that we called new energy or clean energy. And we started introducing solar solutions and clean cooking solutions through that lens of saying we can replace your fossil fuel consumption with a better solution that will also allow you to be more productive, be safer, be aspirational, and earn real money. And we did this with a lens with a physical supply chain, but then also said that we need to understand our rural customers better. So we had a gender lens perspective, because one of the things that I think that in the conversation you're talking about is women really are the ones that are central when it comes to kind of making these decisions around this work. And so we started with that as a lens. Over a period of time, though, we've evolved as a company where we've realized that climate, to your point, is not just about invest in clean energy solutions. It is also about divest, and it's also about waste management. And so as a company today, we have 10,000 rural women entrepreneurs that are helping 500,000 customers make better choices when it comes to clean energy, but also shifting from low efficiency to high efficiency solutions. And then at the same time, leveraging the supply chain to do waste management, so reverse recycling. And today, what we've been able to kind of understand is because of the climate shift, farmers, rural customers, everyone is more critically wanting to be a part of that dialogue to figure out new ways to protect themselves more effectively. So through our digital platform, we've been able to help get those insights from farmers, from consumers around where are their pain points when it comes to climate, and how can we better then leverage that data to create an aggregated opportunity to bring in more financial services opportunities to make that scale. So that's the lens that I come in from.
That's great. I love the focus on users and users' needs. I mean, actually asking people what's important to them. I think sometimes when we're thinking about UN and Paris Accords, that perspective gets lost. But Tim,
you were also sorry, one quick point. You were bang on about the fact that like it's a climate justice lens, right? At the end of the day, we do need to ask people. I think the point that you made about expensive products and solutions and linking that to financial services, redesigning that with the lens of volume, because it is an economy of scale.
For sure.
Yes.
Yeah, I definitely want to come back to that. But Tim, let me ask you to introduce yourself. I know that Mercy Corps Ventures has been a really important thought partner for us in thinking about this opportunity. So yeah, a little bit about Mercy Corps and how you guys are thinking about the opportunity around climate.
Yeah, absolutely. And thanks for the invitation to join today. Really excited to have this conversation because it's really top of mind for us these days. We've reoriented pretty much everything we're doing to two overlapping mega themes: financial resilience and climate resilience, and often those things are converging together themselves. And so, yeah, very excited to continue the conversation. So my name is Tim. I'm managing partner at Mercy Corps Ventures. Have been with Mercy Corps since we launched our investment fund about 6 years ago now. Mercy Corps is a global nonprofit focused on a number of different areas around humanitarian response, economic development, agriculture, climate resilience. And where we come in is similar to corporate venture capital fund. We're investing in startups at the pre-seed to growth stage that are developing commercially viable solutions and scalable solutions to some of the problem sets that Mercy Corps works in. And so again, climate resilience is top of mind for us. Prior to that, recovering entrepreneur worked with a variety of startups in Southeast Asia. So our whole team tries to bring an operator lens and really a product development lens when we're looking at what we're trying to do in the companies we work with. So for us, the first 3 years of our fund life was a lot about exploring different markets, primarily Southeast Asia, East Africa, and leveraging Mercy Core's core expertise in financial inclusion, financial technology, and agriculture to make investments. And I think from that initial cohort of around 10 investments or so, my mind escapes me because the clip keeps going up. And so I think about 10 or so, we started to recognize some trends in that, one, if we really want to move the bar for any of the populations that are interfacing with these products and technologies, we had to have, one, a constellation of investments clustered around those individuals. And then two, if we were really, trying to move the bar and create systemic impact, we need to have a very long-term lens. And it's impossible to ignore the stresses and shocks that climate change will produce on, farmers, rural shop owners, you name it. And so I think about 2 years ago, 3 years ago, we started taking the lens that we needed to be long-term investors and we needed to really create a constellation of investments around climate change if we were really to have an impact and see commercially viable solutions to some of these challenges and pain points that, again, farmers, suppliers, shopkeepers, you name it, are facing. And so that's where we're kind of coming from. I think we, originally looked at a lot of digital financial solutions that were enabling people to increase their incomes, to save, access, become borrowers, you name it again. But again, to what end was always the question. Where we've reframed a lot of our work now is looking at, again, what are the specific pain points faced by, say, a rural smallholder farmer? It's going to be access to finance, certainly, but if they are to be really resilient to climate change stresses and shocks, they will need access to assets, access to potentially replant their crops, access to new types of markets that will value, the investments they're making to do so, access to weather information, you name it, a whole cohort. And so we're really clustering investments around all those problem sets. And we see financial technologies is really core to that, really the hook that enables all these other things to happen. And so that's the way we've been approaching it thus far. We're relatively early in our journey, but making around 2 to 4 investments per quarter, focused really on the confluence of financial resilience and climate resilience. And I think the last thing I'll say for now before we dive into more questions is I think what's particularly exciting to us at the moment is, looking at what are the opportunities to democratize access to financial products as a result of, emerging, advances in DeFi and crypto, number one. And then two, how can we look at the opportunity to create new kind of data infrastructure that allows a whole host of value-added services to flow up and down supply chains. I think because we see consumers and regulators and corporates increasingly looking at how to build their own resilient supply chains and be more inclusive to varying degrees, we see this as a huge market opportunity for startups that we're investing in.
Yeah. Yeah, I mean, that idea of crowding in and the ecosystem, I think we learned that lesson early on in fintech, but we're still sort of building out what that might look like for a sort of climate or climate-friendly type ecosystem, and I definitely want to come back to that. But first, Aditi, I'll ask you to introduce yourself and tell us a little bit about how Asha is thinking about climate and approaching the opportunity. I know, like both Ajaita and Tim said, well, when we looked at our users, when we looked at the people that we actually want to serve, it became abundantly clear that we can't ignore climate. And I wonder, from a more sort of pure investor perspective, what your journey has been.
Thanks, Mallika, at the outset, for having me here with a very diverse set of, folks. It's a small world, but I see that we have very different views and lens at which we're coming at this. So it's great to put that together in a conversation. I lead investments for Asha Impact. Asha Impact is an early stage investment fund where our mission is to mobilize domestic capital for mass market focused startups. We typically back these startups at the pre-Series A or Series A stage. That's when we come in. The idea is to be able to offer not just capital, but value add from our LP base, which consists of a lot of ex-founders themselves. People who've taken companies to sort of from zero to an IPO stage. So that's expertise that really lends itself well to startups which are looking to scale rapidly. We take a sort of sector agnostic lens to investing, and I'll talk about why that is. Right, but just before that, a little bit of an individual background. I've been doing equity investing for almost a decade now, a little over that. Started life in microfinance, very similar to what Ajaita and Tim mentioned, and which is why mass market startups or mass market focused businesses have always been very close to heart, because we care about that end beneficiary, right? And how do we make their life better? A lot of us in the space of impact investing are driven by that mission, that how do we make this a more level playing field for people who've been less fortunate than us. So that's the mission that I followed in my career, and that's the same lens with which climate as an interesting area emerged for us. Much before climate became a theme again, it had its resurgent moment of becoming cool or a buzzword again in the circles. We did investments in the waste management space almost 3 years ago. We're investors in India's leading private sector company in the waste management space called NEPRA. And that happened without us looking at climate as a distinct theme. It happened because we were looking at folks within the waste management value chain, both on the side of individual workers, and we said we need better working conditions for these folks. And when we looked at landfills and said, this doesn't make any sort of sense that we're dumping so much of what should be recovered. So how do we improve India's recovery rates of waste from 25% where it currently stands? So why we care about climate and how we're looking at it today is actually again from the beneficiary lens, because what all of us working in the field of microfinance realized almost a decade ago is that there is no silver bullet, right? If you care about this end household, then you have to look at it from a holistic basis, and that means caring about education, healthcare, food and agribusiness, livelihoods, the whole gamut, because one adverse incident on any of these parameters and you put them back, by almost 5-6 years in their economic progress. So for us, climate and this sort of target segment converges because climate is a theme that extends across sectors, and that's something that's distinct to climate tech investing today versus what was happening a decade ago, when climate tech investing basically meant investing in renewable energy businesses in some form or fashion. Right. And after the big Solyandra sort of debacle, a lot of investors just took a step back and said, well, this is not for us. Very high stakes involved. Today, climate lends itself to a lens that we can apply across a number of sectors, whether this is agri-tech or healthcare, or pollution. And why we think that lens matters is not because these, that target beneficiary we're talking of is contributing more to this, right? So when, let's talk about agri-tech. It's not that we are saying, how do we keep the income of this individual going strong in the case of, in the face of a lot of climate change. It's also that changing climate is affecting soil moisture, it's affecting, productivity for the farmer, and it's going to lead to food security issues if we don't change how we're going about this right now. And the moment we have food security issues, it's the vulnerable sections of the society who get affected first. The same holds true for air pollution. Right? I think New York Times did a fantastic study where they mapped the day in the life of a student who went to a government school versus a student in a private school in Delhi, and they said the exposure that the student going to a government school has is sort of 10x of the other, and that's why we care about these solutions. That the end customer segment that we care about, or the end household, gets affected in a lot of negative ways. I'll just sort of conclude that opening remark with the perspective that we think it's a very exciting time to be doing climate investing, even if you're not an impact investor, right? Because all of these different areas we're speaking of are great business opportunities, and climate as a lens can be applied in places we couldn't think of, ever before. I think this panel, the fact that we're talking about climate in a global fintech fest, is representation of that, right? Who would have thought these two would come together? So we're going to see a lot more of that in the coming years
Yeah.
as our perspective, which is why we're excited about investing more here.
Thanks so much. Yeah, I loved that New York Times piece. I thought it was just like a fantastic, really compelling nugget of just how different the meaning of climate change is, for different segments. But what I really want to highlight also about what you said is that there are so many really interesting, really exciting models out there, and that they, are across a range of verticals. And I think those of us who have been thinking about this a little bit longer have that sense of optimism and have that sense of like, okay, here's how I'm going to go after this problem, or here's where I think my organization can intervene. But one of the things that I hear from people who are newer to the space is like a sense of, I don't even know where to start. That this seems so overwhelming and so dispersed that my LPs are saying, let's do something on climate. And I don't even know what a climate deal looks like. So maybe Tim, I'll ask you first, and then Aditi, come back to you. Like, what are the climate theses you're really excited about? What are the product spaces? And to the extent possible, let's be super concrete. So, if we have an LP who maybe isn't necessarily an impact first investor, or might be slightly newer to this population, or not, from a microfinance background, where are the most promising entry points for investors in this space? What are you really excited about? Tim, can I turn it to you? I think you're on mute, or I'm not the only one who doesn't hear you? No, still no. Aditi, can I ask you first while Tim sorts out his?
Yeah, sure, absolutely. So, Mallika, we're excited about a lot of business models spanning sectors, like we briefly spoke of, right? For example, in the area of environmental analytics, right? Somebody developing a great product for putting together, weather data in an intelligent form and fashion, which can be packaged as actionable insights to different, enterprise businesses who are then using this data in use cases across, let's say, insurance, in digital healthcare, disease management, agri-insurance. So for us, those kind of businesses make great commercial sense as well, because what you're building on from a business model perspective, it's a SaaS business, right? You're monetizing a software product from an enterprise client. And that's a very well-proven, resilient sort of monetization engine. So if you can find a way to get enough customers for that use case, it makes a lot of sense for us. And again, because the action may be taken by an enterprise, but the benefit of it, right? It's like that positive externality. It flows to the kind of people we're talking about. And just like in agri, we've seen, right, that a lot of the time the intelligence is passed on to the farmer, but the monetization comes from a larger buyer or aggregator who wants to make the supply chain more data rich. So I would say environmental analytics is one. Waste management is an area we continue to be very keen on, because what we've seen in the last 1.5 to 2 years is policy has played a very big enabling role in this sector. Yep. The Swachh Bharat program, there's a lot of interest from different municipal bodies to embrace private sector innovation in the space, and partner with vendors who are willing to be scrutinized and are willing to promise reliability. Unlike smaller players that they've been interacting with in the past. So, and we're also seeing a lot of new, very talented teams also take up this, segment, which is unlike the decade that was prior, because waste management was considered such an unglamorous sector. Very, you would say you have waste mafia that operates in this segment, so we wouldn't want to touch it with a, private sector business approach at all. So, I think policy and shining light on this segment overall, which the current government has done, has really done well for this space as well.
Yeah,
that's
great.
I agree, but I think Tim also mentioned that as what they care about. So let me turn it back to Tim and you with that.
Yeah, Tim.
Okay, back on. Great. Sorry about that. I was just going to say I would point folks to your investment brief from August, which I think does a great job of breaking down in very clear terms kind of the different fintech modules that one can look at. I mean, I think for us, we are, within talking about fintech in particular, I think anything in the digital payment space, there's still a ton of room for growth, particularly if we're talking rural and agri supply chains. Just incredible amounts of opportunity there. We've made a number of investments recently that are looking to connect kind of the decentralized finance universe with farmers or trade financiers or other companies who kind of work with farmers. And we see that as a huge opportunity. We're also looking at a few investments. This will get into the next kind of module and sector we're interested in, looking at different ways of risk transfer and insurance for price volatility, for weather, you kind of name it. Again, leveraging the amount of capital that's kind of locked in the DeFi universe, and willing to look at different ways of moving that around or staking it. InsurTech's where we've done a ton of our investments. We still think there's a tremendous amount of room for growth from the micro, meso, and macro level. So we've made investments in InsurTech, mostly in agriculture, but also in health, all three of those levels. Underpinning that, I think, is and maybe more tangible in that, from a company that is looking at like flood risk modeling, which could help spur the creation of new types of flood insurance products, to also companies that are directly providing to farmers weather index-based parametric insurance, to other companies that are bundling insurance with inputs in case the inputs do not yield the product. You kind of name it. Anything within the risk transfer area we see is really ripe for disruption and growth, and a lot of really interesting examples we've seen out of India as well that we've looked at. And then finally, I think the other area we're particularly interested in is, I hate to say digital ID because that's a very loaded term in terms of, that could mean kind of like identification scheme that you sell to the governments to then cascade down, or it could mean a lot of things to different people, right? But for us, I think it's what is that data infrastructure that allows you to capture the data. I think like everybody's talked about already on this, that allows you to capture transaction data, data on a farmer's plot, their history of tilling that plot, everything related to that. That can then power a whole suite of new types of financial technologies, products, risk transfer. That is an area that we've made a number of investments in, and we still think has a tremendous amount of growth.
Yeah. I love this intelligence that's coming from what we know about fintech and digital financial services, that it's not just the B2C. It's not just the last mile, but it's also the architecture and the systems and the data that enables those last mile models to really work, which, I think we're still building out the bits and pieces that are going to make it work for climate resilience. Like both of you guys mentioned data around insurance, and there's a lot of willingness and a lot of interest in getting those models to work, but still a lot of opportunities, a lot of gaps on the data side. But Ajaita, I'm going to ask you, as the entrepreneur who's on the ground, who really sees that end user day to day, what are the opportunities that you're really excited about?
So one thing I'll say that's really been interesting for me for the convergence is the other piece of fintech is also social commerce, especially if you look at India. India is literally one of the largest social commerce players right now, right? When we're kind of saying that you connect financial services to market opportunities through a digital platform, leveraging these Salesforce, right, on the ground that are connecting rural customers. And because of the technology shift in India, you have more and more tech plays that are allowing you to capture that data, right? So I actually think the challenge is that we don't know what data needs to be captured. But there's companies that are literally saying, hey, we have 10,000 entrepreneurs or 500,000 customers. Tell us what data you want. We can actually aggregate this a lot faster and then facilitate the services. And I think that to me is something that's really exciting, saying that we have actually a very clear-cut role to play in bridging this gap. And then the second piece I think is really interesting is that most access companies that have been working in climate for a decade in India have also digitized. So they actually understand climate in a way that the fintechs don't need to. But the fundamental level is that you can now integrate the fintech services. So API integrations today open an entire world of better delivery of financial services to the customers that everybody wants to reach in this new, really exciting way. So I can give you a very tangible example. We have been selling clean energy appliances and high efficient appliances for 3-4 years now. But we literally connected with fintechs that essentially wanted to give a loan to our customer, but we were able to design it with a climate lens. And we were able to actually get the customer a loan for a durable that is high efficient and low carbon emission at scale. So I think there's an exciting convergence, again, as everyone has been using as a word. But tangibly, I can tell you that farmers are also, on an aggregated perspective, seeing the pain points of climate in a way that's shifting behavior change. So for a very long time, we've always said that the challenge about climate and inclusion is that farmers don't actually see, or like the rural communities don't see that connect. But given everything that's happened in the last 5 years, 6 years, 10 years, people are very clearly recognizing that they need to protect themselves from climate challenges. And so you see a very growing demand for financial services that are about resilience and protection and safety, which means that you have climate agri-insurance opportunities opening up galore. You also have people that are willing to now bring in energy efficient appliances because they're recognizing that they need to be more effective in what they do. So there's loans that are coming in. So I can give you examples. We work with ag tech finance companies now, linking clean energy durables to our 500,000 farmers. So somewhere or the other, by definition, regardless of the vertical, there's a convergence of climate, there's a convergence of finance, and then it could be in any vertical. It could be in agri, it could be in consumer durables, it could be in digital services, and somewhere or the other, you're seeing people paying attention to it, which includes the users, which I think is really exciting.
Yeah. I want to go off script for a second. Like, I think that, this thing about like refrigerators or air conditioners can cause some cognitive dissonance for folks. We were saying like, okay, we're trying to get people to use less energy and be more efficient, and, put organic inputs into their soil. Then you're giving them an air conditioner. Like, how does this square? How's an air conditioner a green solution? And, part of the answer is that, well, it's really hot and it's getting hotter and people need cooling solutions, but also that there are sort of more or better ways or less harmful ways of doing some of this stuff, right? So I think, Ajaita, your comment on high efficiency appliances meets both mandates, right? It both mitigates your emissions, but also, if you're talking about a refrigerator, helps people deal with the, increases in temperature they're experiencing.
Well, I also said that at the end of the day, why are we doing all of this, right? At the end, one of the reasons why all of us are here is because we do care about the Sustainable Development Goals. We do ultimately believe it's about, creating equality, right, in the landscape. And I think it's really unfair for all of us to sit in AC homes and then complain about the fact that rural people at the billions want cooling. Like, it's a ridiculous, and then we keep trying to design in a way that we're not understanding the connection. So I do agree with your point. It is about justice at the end of the day. Today, we're here to say that, let's be clear, when lockdown happened and suddenly there were no cars in any of our streets, like, Jaipur's weather changed and animals came and the world became a better place. That had nothing to do with farmers, right? Farmers did not change their practice. It was the fact that our carbon emissions and climate is actually responsible for the first world solutions that we've been designed as people. But we also recognize that divest and better investment, because there are billions of people that can shift behavior. How do we design a way that incentivizes the opportunity, right? Reduce the efficiency, create the opportunity. And I think financial services only just push a better direction of quicker behavior change. If you incentivize a farmer to get a high efficiency product through a better financial tool than otherwise paying a low efficiency product on cash, game changer, right? In terms of how we're looking at this.
the solutions that Aditi's highlighting around waste management, I think, have a similar win-win kind of flavor to them. Or the solutions that Tim's talking about in agriculture have that same win-win, that we're both addressing the climate crisis and the emissions crisis while also addressing a resilience and livelihoods problem. And that brings me to the sort of next thing I wanted to talk about, which is the extent to which these solutions that we're all talking about seem to be so localized, right? They're about a local waste management ecosystem with potentially like a sort of government program that's enabling it, a community development organization that's built, maybe a pickers kind of organization with a plant that's able to process, that we're talking about these ecosystem plays. And I'm wondering about the balance between that really localized network crowded in versus a like tech-driven, replicable, plug and play kind of background that we have. I think that's the mental model a lot of us come with from the fintech world. And I'd love to just hear your reactions about, what's the right balance for us as impact players? How are you thinking about global versus local? Aditi, I'll start with you.
Sure. So, Mallika, that's an interesting question, and I think it depends. It's very specific to the product or service in question, right? So, one of our investee companies, Greenway, they sell clean cooking stoves to rural households in India, right? And they've found tremendous success in global markets as well, through other funding partners who've helped finance sales of these stoves in African countries as well. So that's an innovation that we've seen build in India and grow globally. Having said that, India is a very, very large market opportunity in itself. So as investors, there's always, this point about wanting our founders to stay focused and, double down on what's going well. So a lot of the times we think that there is possibility of taking this globally to other emerging markets as well, but the timing for it needs to be played out well, right? Because do it too soon and you spread yourself out too thin. Do it too late and you've left it out for competition to come capture that market. So timing it right is very important. I think businesses which are leaner, like the environmental analytics business we spoke of, they will go out to the global market much sooner because finding paying enterprise customers is easier in overseas markets than India, right? And once you have that base, you use those logos to come and sell to Indian enterprises who want to follow what global players are doing. So it's very specific. We think the opportunity exists, but it'll play out in sort of different points in time.
Yeah, that's fascinating. It's funny, this balance between these tech-first solutions that are low capex, but then also these like asset models that have huge capex, but are part of the same solution set. No, like it's not independent of each other. But Tim, let me ask you the question about, oh, sorry, Aditi, go ahead.
No, I was just saying, which goes back to the point about this time is different.
Yeah, I think you're right. Tim, can I ask you a question as a global local kind of investor, how you're thinking about replicability and global versus local theses?
Yeah, for sure. I mean, everything's inferred by the color of our money. And then the color of our money is looking for, fundamentally, we're an evergreen fund. So we don't need to return, Uber/Facebook style returns to our LPs. However, we are looking for companies that we truly do think can create kind of can make some dent in a big, hairy problem. And so we are looking for very scalable companies, and by nature of that, it's going to be probably tech-enabled. And the reality is it's probably going to be, as we look across the portfolio we're trying to construct, a mix of companies that we think can, say, work with tens of thousands. I'm going to case this in agriculture to make it easier, can work with tens of thousands of farmers, and then companies that we think are creating, say, the data infrastructure or financial technologies that could reach millions of farmers, right? So we're going to have kind of a mix of those two. Because again, our kind of the way we approach this is very much like to look at the opportunity to recreate, say, a supply chain to make it more resilient, equitable, inclusive, is going to require a host of different types of new companies that we haven't even imagined yet. And therefore, there's going to have to probably be a role for a startup that's working very closely with companies that's with farmers that is vertically integrated, has a lot of control over kind of the entire customer journey, farmer journey, coupled with a more digitally enabled insurtech solution that can then kind of ride the rails of that vertically integrated company, and then a whole host of other ones. And so for us, while we're focusing our investment on kind of these, we are constantly looking at partners and how we can work with those that are more community based or kind of playing that kind of last mile or first mile role, if you will. I do think that again, as a global investor, a lot of what we're trying to do is to invest in, I think, new types of models that could create new proliferation of products and services on top of them. So again, looking at like what would a new type of traceability protocol or system look like, or data infrastructure, or land tenure system, like all these kind of, I'd say, kind of moonshot dreams. But if they work, that can then power a host of other innovations in companies or be incorporated into other companies. So to give one tangible example, it's like how might a very intelligent chatbot allow farmers and other parties to access financial capital, to better understand how to adapt climate smart agricultural practices and so forth. And then on top of that, you can crowd in other types of products and services that again actually allow for a resilient supply chain. So there's a few ones off the top of my head.
I'm going to jump in because I'm going to tell you that I don't think it's that outlandish, right? It's already happening in India. I'm sorry. Like supply chain logistics companies have not been seen in the same lens that it's really critical for us to see now, right? Supply chain tech companies are now the aggregators, right? They're actually looking at mapping supply chains from like the last mile piece all the way up to the suppliers and starting to think about not just delivery of solutions, but reverse logistics. And it's already happening in a really exciting way. The key is to understand who's going to be the entrepreneur that brings in the different pieces, right? Like, so I can give you a very simple example. Last month, we launched a recycling opportunity to sell better clean energy torches to our rural customers. So 500,000 customers were ready to give their old torches, their LED lights, their like lithium ion batteries and all these things that are wasted to get a better solution. And we literally mapped out getting those back into the supply chain and linked it to a recycling facility in Delhi, right? But the mapping and the understanding of how this entire fits is all about who's going to be the critical player. The challenge that we've seen till now, and Tim, I'm going to kind of be I'm going to disagree with you on this, is that I actually don't think it's about single verticals anymore. It's no longer about the ag organization to kind of figure out the entire value chain. It's actually about all these different verticals, understanding where the value chain can optimize its own offerings, and then you bring in the technology, right? So what's interesting for me is on a regular basis, I mean, we have 500,000 customers and we have these 10,000 women. They always go, what are you doing for reverse logistics in terms of organic business modeling and whatnot? And I go, I have no expertise on this, but I will bring in the person that understands ag markets, right? And so somewhere platforms and supply chains need to be better seen. And then where does finance come in? Where do different verticals come in? And let's understand that all of us are still thinking about the user base, right? And this is happening more and more in India in this really exciting way, right? Like today, if you look at tech data access to rural customers and you look at different verticals, you actually now, with government and social businesses put together, have almost access to almost 600 million people of data and access and infrastructure that we're not thinking through differently, right? So I would encourage us to look at this with a different lens, right? Like, let's look at, there's tech, there's supply chain, there's verticals, there's a joint intentionality of climate and finance, right? And then bring those players in differently so that we can actually say, we're not going to invest in one company, we're going to invest in a ecosystem. So we less complicated, right? So like the supply chain company will still be amazing at reverse logistics and fulfillment. The fintech company is going to be amazing in financial service creation. The access company that's a social commerce platform is still going to be amazing at connecting the customer and driving insights. And that's kind of what we did at Frontier Markets. And that's why it's been interesting to kind of see the shift of how you bring in new verticals. But I'm just saying is, I think we're seeing this in India more than ever, especially post-COVID, right? You're seeing a lot more convergence and partnerships where not one organization is single vertical, but multifaceted.
Yeah, I mean, I think in a lot of ways we're lucky in India to have like a very substantial base of digital rails, no, that I think we talked about a couple of times, that provides a foundation for a lot of these services. Then on top of that, as Aditi was mentioning, a government mandate on a lot of these issues. And I think there's, those factors play in and play out in different markets differently. But I think that brings me to sort of the last question that I really wanted to give us time to delve into, which is, what are these conditions for making this sector really work well, and where are the barriers? I mean, I think one of the things that we're hearing is that there's demand from users for these solutions. We're also seeing sort of like global conversations really getting amplified and accelerating in pace, but still a lot of confusion about what's happening in the middle in terms of actual solutions and getting this stuff to people that need them. And what are those levers around barriers and enabling conditions, aside from just us, the startup and investor players that are really important to getting this sector moving? I'm not sure who to. Tim, I'll
Yeah, it's a big question. I think that certainly we're a global investor focused exclusively on sub-Saharan Africa, Southeast Asia, and Latin America, and so I'll speak to kind of those contexts. But what we see, generally speaking, is anything that does not have a clear liquidity path within 5 years really struggles to access any sort of financing. And so there's a lot of investment classes that have been de-risked. Fintech, of course. I mean, we're competing with like Sequoia for fintech deals in Cameroon and stuff. I mean, it's insane, and great for entrepreneurs in many ways. But outside of fintech and then maybe logistics and mobility, we just don't see anywhere near the same amount of capital available. And if you're talking about companies that are still working with less than 1,000 farmers, let's say, if we're going to again take kind of agriculture, most will say you don't have the traction, we don't want to take on the risk. You're only going to get through 1 or 2 product cycles a year, given crop cycles, all these things, right? And so they just won't touch it. So we see still a huge funding gap in all those markets for these companies that we think can develop kind of the next suite of innovation for again farmers, for shopkeepers, the folks that we care about. So that's number one. I think 2 is that that's a constant complaint. So it's something I think will start resolving itself as we embed fintech and some of these other types of models. I think the second area is that again, if we're talking about some of the hairiest issues around climate, it inevitably is going to touch the government. And if you have contexts where the government does not have the resources or is not thinking about it progressively, then your ability to actually help make an individual more resilient or really capture kind of the opportunity around, say, insurance is going to be relatively limited. So we've had a number of contexts where the government looks at parametric insurance and says, well, that's cool. It was kind of a gray space, but then suddenly decides to regulate it and, company goes under, right? So many of these solutions are going to touch government. We can't get around it. Many of them probably have a home in the government, and that's something as a global investor that we see as both an opportunity, but also a barrier in many contexts.
Let me just stick with you for 1 second, Tim. We have a question in the feed about carbon credits, and I know it's huge opportunity for fintech, right? Yeah. To be able to get payments to people, get the technology they need to actually be able to measure and monitor, whatever sequestration is happening, but also a space where there's a lot of need for clarity from government, clarity from enablers. Any thoughts there?
Yeah, I'm not going to claim to be a carbon cap and trade carbon investment expert, but we've made a few investments in the space, and yeah, it's something I'm acutely interested in. because it dovetails quite a bit with land use and how do we incentivize different non-extractive models for land use. Because when we look across most of our kind of first vintage of portfolio companies, the entire aim was how do we help farmers to increase their incomes, plant more intensively, probably monocrop. I mean, we're kind of running counter towards climate resilience, to be honest, right? We're just feeding kind of the current beast. And so I think that the potential of the carbon credit market, if you believe that regulation is going to come in from developed countries, that's going to drive the need to cap and tax. There is opportunity there. We're seeing that in parts of Indonesia with project developers. We're seeing a suite of really interesting companies that are tokenizing carbon credits. We're seeing others doing around verification, which is a pain point. So fundamentally, I think there's a huge opportunity here if we believe that actually the carbon markets are going to continue to be as active as they have been in the last 2 years. And
there's like some skepticism in your voice that we'll have to save for the next panel. But Aditi, can I ask you, barriers, enablers, any quick?
Sure. So, Mallika, for any sector to start thriving, we see three key tenets, right? It's talent, capital, and policy. In most of the consumer tech sectors, what you would see is talent and capital leading the way, good intermingling there. And, there's a view that if we become meaningful enough in terms of size, policy will work in our favor. We've seen this happen, let's say, in the case of, cab aggregation or e-pharmacy, a lot of sectors. What we see happening in the overall climate tech space is policy has a more leading role to play. I think Tim also spoke to this, right? We've really seen that policy can jumpstart or catalyze this segment much more than any other. So, for example, in the case of waste management, right, EPR regulations, they're a big driver of money flowing into the space right now. It's also a big driver of good teams who are now coming and building, businesses in this space with a software lens, not getting into the brass tacks of waste collection, segregation, any of that. So I think policy has a role to play. What we're optimistic about is we're starting to see really good talent come in and tackle these hard problems. Capital really is the last one entering the room. So I think we as investors have to do more rather than having being dragged in, kicking and sort of reluctantly. This is an opportunity that's actually quite exciting if we look at it with a broad lens rather than getting fixated with what climate tech investing means. Then we will see ourselves open to the possibility of a lot of value that can be created for private sector capital as well.
Yeah, I love that. Ajaita, I'm going to give you the last word on sort of barriers and enablers, and I think
sure. I'll keep it very crisp, even though I haven't been crisp for most of the evening. But I think the barrier is in design. It's not opportunity. The opportunity is massive. I think the design has to shift on the impact in the investor's lens. I think I completely agree with what Aditi just said, that policy is actually in the best place right now in terms of enabling this. We have to look at this with scale. When I say our design needs to shift, our lens needs to shift. We have to stop looking at this with single verticals, but also start looking at this as like a convergence opportunity. And I think that the larger challenge that we're going to face is everyone has very different definitions of climate. We need to come to a convergence on what climate as a definition is, true to the entrepreneurial form, make it into unit economics, and understand how to then take it, replicate it, and then sow sustainability there. I also think that the challenge here is that the fintech space is coming late to the game, so they need to actually understand what's happening already. So I think this is a great segue for people to see opportunity, but on a fundamental level, engaging the counterparts will be critical to make that shift happen. And enabling factors is that market's ready, infrastructure is ready, tech is ready, and I actually believe there's enough capital at least committed to get started.
Yeah.
In terms of an ecosystem, and we just need to figure out how to blend those two together to give good examples quickly to close this.
Great. Thank you so much. Really, thanks so much to our panelists. I'll just let you know that at bfaglobal.com, we have the publication that Tim referenced earlier about sort of solutions that we think are on the, are going to lead the way for digital finance for climate resilience. And today actually published a paper about the 8 theses that we're really excited about as at sort of the early stage and the incubation accelerator stage. So I encourage you to take a look at that. And I'm really, really appreciative of our panelists' time. Ritika, I'll turn it to you.
Thank you, Ms. Anand, and thank you for such an engaging discussion. A special thanks to our delegates. We really loved it and hope to see you all very soon. Thank you.
Thank you, guys.
Thank you.